All right, welcome guys to another video of my YouTube channel, and today we're going to be discussing it's going to be a continuation of the previous video of last week, which was about trade entries. This is going to be the opposite of an entry. All right, when you go to a hotel, what's the next? What do you see there? Entry, exit. All right, so this video is going to be about how to exit a trade. All right, so guys, first of all, I want you guys to like and subscribe. My views are getting up a little bit. No matter how small, it's good. The main goal for me here is to teach both myself and you guys. All right, that's the main goal here. Right. So first of all, like, subscribe to the channel. They'll help push the knowledge further and further and further, which is going to be of very good use and help to me. So thank you very much, guys, and for doing that. Just please like and subscribe. All right, like and subscribe, and also comment and tell me what videos you want me to make or what topics you want me to talk about more or teach more about. All right, so let's go into the video. So today we're going to talk about trade, how to enter a trade. All right, I'll just put it up there. Remember, I told you guys I would like to write. So let's put it trade exits. So that is it. Trade exit. Is that how to spell exit? Did I get it wrong? Wait a minute. This is because I'm using capital letters. It's looking wrong in my eye somehow. Exits. Yeah, I think yeah, that's it. Not because I've used capital letters or something. Trade exits. Or they shall put it how to exit a trade. I think that's how I put it. How to exit. How to exit. What's wrong? Okay. How to exit trades. How to exit a trade. All right, that's it, boss. That's it, guys. So how to exit a trade? So you can see right there. This is Euro GBP. So exiting a trade is the ability to, because one thing that people usually get right is they always want to know how to enter a trade. They always want to know how to enter a trade, but they fail to know that one of the part of trading is exiting. You have to know when to exit that trade or how to exit that trade, because the trade is not definitely going to keep going up forever and ever and ever. At the point it's going to come down. And at a point, it can come down back to where you enter the trade and even go further to hitting back to your stop loss. So what I mean by that, let's say we enter the trade from here. So we enter the trade here. And then our target was probably here. So you can see that's a 1 is to, let's say, well, let's just keep it as the 1. That's the 1 is to 2.5. So we enter the trade right about here, around here, and our stop loss was here. You can see that yes, we entered, but we need to know when to exit that trade. All right, because the trade will not keep going up like this. It will not keep going up like this and that forever and ever. All right, at some point it's going to come down, and so you see it came back down here, went up, came back down to the entry, and even went past down to the stop loss, and will be in loss. So you have to know when also to exit the trade. All right, you need to know also when to exit that trade and where you should exit and how you should exit, and I'll tell you how I do it, and that is the way I do it in my trading. So let's get into it. So first of all, one of the many ways of knowing to exit a trade is reversed on how also knowing how to put your stop loss. All right, this is what I'm about to tell you guys is the same thing that's preached over and over again. Where do you keep your stop loss? You keep it below previous structure. All right, so let's say, let me get rid of this first of all. So let's say you got in right about here, because actually you see this trade in this market here. I actually saw it, but I didn't take it because I was in another trade. Right, I'm anticipating for the buys of UGPP, but I didn't take it because I was in another trade, so I just let it go. I can't risk that too much at the same time, so I let the thing go. But I saw it clearly. It was very so much, just like the best setup. I just left it. All right, I just left it because you could still come down right now. Right? So I just let it trade. So Let's say we got in here now. It's always advised to keep your stop loss below previous structure. This is the 4 hour time frame I'm using. If you go down to lower time frame, you'll see much better entries. I usually don't enter on the 4 hour, I enter both mostly on the 30 minutes and 15 minutes as usually my entries. 4 hour is usually my analysis time frame too, where I check out structures as a day trader. Mainly I look at structures for the 4 hour very most often because as a day trader, that's why I look at that. And also the daily also too, because the daily it's a time frame that everybody cannot ignore. Even scalpers look at the daily charts. All right, swing traders look at the daily charts. Day traders look at the daily chart. Daily chart is just a chart. Is a chart. Is a time frame that no trader, no type of trader excludes the daily. All right, because the daily is the day. All right, you show you what happened during the day. Even if the candlestick you're looking at, but sometimes me I ignore the weekly, I ignore the monthly too. But the 4 hour and the daily I don't, especially the 4 hour. But the daily I don't ignore the daily. All right. So let's go back to the video about exit. So it's usually advised to keep your stop loss below previous structure. All right, because it is believed that market. Okay, let's look at here now. Here has held for a long time since 2024 September. Here has been a support area. Market came down, held here, came down, held here, went up, came back again, went up, came back again, held, went up, held, went up, held. So it's advised that well, keep it below structure because the market is likely going to come back and hold again and push up. And probably keeping it around this area. So that is the logic behind keeping your stop loss below structure. All right. So that's for stop loss because that's the because let's say you keep it, you enter the trade. Let's say you enter the trade around here. Okay, let's say you enter the trade around here, and then or let's say you enter the trade around here, and then you kept your stop loss around here. You can see that the market went up. All right, you can see it went up and came back right down. See that pin back and remember kick our stop line and keep moving to direction. So those advised to keep it below structure because it's less likely to come back below that to that structure and pass it. If you pass it, then there's no how you were already wrong in the first place. Right? No, I was wrong, I was totally wrong for this trade. But because of those scenarios whereby it's going to come back, hold at that same support and then keep going on back. Alright? And I mean I like to give a little bit of space, just a little bit of gap there, right, between the previous the support, the real support, and then because of all these weeks, so these spikes, market just come spike up, spike back up again. So I like to just keep it a little bit below, just for the tech for those wigging out times. All right. So that is it. That's about stop loss. What I'm saying, why I'm using stop loss is because it's just going to be the rest about also the take profit, which is the exiting your trade. This is the first part I'm going to talk about. About it's about structures. All right. So, so as I was saying, as you can see, you kept it below structure. Same thing goes for your take profit because that's where you want to exit the trade when you enter it. Your take profit is where you exit. All right. Your stop loss is also where you exit the trade, but in loss. The take profit is also is the reverse. You exit your trade in profit. So that's why I'm using both the stop loss and the take profit, starting from the stop loss. All right. So I started from the stop loss. You keep it below previous structure and below there. All right, and explain why because market is likely not come back there, or even though it come back there to reject that area back upwards. All right, if at all it breaks that area, then it's likely to keep pushing back down. You get me? So right now, actually, let me just point this out, guys. GBP USD next level target is 0.2570. That is the next level target for GBP Euro GBP. We had it from Kingsley's radios first. All right, so that's just a what I say daily radio station or daily news. All right, so that's the next level target there. So I'll be looking out to sell Euro GBP. And so going further, something goes further for the take profit. All right, that goes same for the take profit. But the take profit now is we keep it at the next structure. All right, so this is the next structure here. All right, so it's like best to keep our trade at the next structure. So this is where you actually should plan to exit the trade here. All right, now you know you see this thing spiked up like but it's spiked up, what about it, bro? Most times it always just reach here, and then it's always most like it's about probability. All right, the market is most likely to reach here. than to break there, because this is also a zone. There will be a lot of orders here to sell orders, waiting to sell this market at this point. All right. So the market is best likely to reach it. So it's most likely for you to keep your stops there. All right, because some people is going to be expecting, no, it must be 3:1, it must be 1:3, it must be 1:5. Bro, like if it's me at this point, this is where I like it to keep my stop, because I know that it is best likely to reach the zone. All right, it's best likely to reach that zone because this is a resistant area. Market is likely to reject itself at a resistant area. All right, so that is one thing to know about keeping it at resistant area. Now we know support and resistance. There are so many things that can cause support and resistance. Fibonacci, some people use the Fibonacci as a form of support and resistance. Trend lines is also a form of support and resistance. We all know the traditional support and resistance. We know the supply and demand areas. Those are all support and resistance. Know the liquidity areas. All right. So we can use any of that. I don't deal with any of that. Mostly I use support and resistance, trend lines, and Fibonacci. I don't use Fibonacci as my form of support and resistance for a take profit, but I use it for mostly an entry. All right. So what I don't mean by that, let me write it down. We exit trade. We exit trades through. So now, one, support and resistance. Two, supply trend lines. Sorry, trend lines. Three, Fibonacci. Four, what again? Supply and demand. Just put /demand. And five, I'll just put it. I don't use like I just pointing out what people use to liquidity areas. All right, good. How to exit trade? We exit through trades through this. So sometimes you exit it because it gets to an area of support and resistance, like in this case. We're gonna exit our trade here. All right, and if we even though we took a buy from here now, we're gonna exit. We are likely to exit the trade here. All right, so you see that we exit the trade, we enter here. All right, let me mark this out. We know that this area now was actually an area of, you see how market has held here, market pushed up, held here, pushed up, held, broke it, came back, retested it, pushed back, came back there again, ejected it, and then pushed right back down. So if we were to enter this trade right about here, this is where we should keep our stop, exactly above there, and this is where our profit should have been, right about here. All right, why? Because this is the previous structure in which we keep our stop. All right, so that will be our trade exits for the stop loss if we are wrong, and this will be our trade exits for the take profits if we are right. And it gave us a 2:3. You must not always fix in, I must get a 1:5, 1:4. If you want this is okay, this is a 1:3. There's no how I'll be hoping to keep holding straight to up to now, up or to here, because of this resistance area that has held here, support area that has held here. So I'm most likely to hold my trade up to here, which is giving me a 1:2.4, 1:4, 1:2.4, sorry. All right, because it makes more sense for that. So you see the market right, come back, right, come back, and then take profit at what? At previous support. Now we can change this to trend lines. All right, we can change it to trend lines. You see, market, because market also holds our trend lines. These are all support and resistance things. All right, for support and resistance is so just so fast. Trend lines are used as support and resistance. That's what I told guys in trading. We all are looking for support and resistance areas. Finish. Nothing more, nothing less. That's all we are always looking for in trading. All right, that's what we are always just looking for. Support and resistance, trend lines are also form of that. Fibonacci's are also form of that. Supply and demand areas are also form of that. Liquidity and also on and so forth. So it is always good to exit trade at that point for a take profit and for an exit and for a take a stop loss. All right. So this is where our stop loss supposed to be at previous structure, which is this zone, and this is where our take profit supposed to be at also previous structure, which is this zone. So the market comes back right there, and we take profit. And mind you, take profits and stop loss are actually orders you set on your broker, or when you want to exit the trade in profit, or when you want to exit the trade in loss. All right, I believe you guys should know right now how to set it on your MT4, because I usually use TradingView for my analysis. So probably one day I'll make a video on showing you guys how to actually enter these trade orders and profits and all these orders, take buy limits and sell limits and all those orders that you see on your MT4, MT5. So you get me? This is how you should be trading. All right. So let's say if the trade is if the trade is giving you a 1:3, then you take it right. All right. If the next structure was at a 1:3, let's say here was actually at this zone, it's fine. But not you keep on emphasizing it must break this zone. It's likely not to break this zone. Just like how it is. See how it's rejected this zone. It came back, did, and you be like, oh, it's gonna be. Then boom, back almost back to your stop loss if you have entered the trade here. Almost, and definitely some of you guys will have exit the trade, because seeing these big large candles, you will probably exit the trade. Right? So I hope I'm making points here for you guys. I'm loving this. But max, actually my max take profit is usually 1:3. I don't go past 1:3. Anything that's giving me more money, I don't take that. The only way you can see me probably being a 1:4 is actually probably an unblind. Let's say the market just keeps pumping and I'm like, wow, this market is really going to go really down, and I'll just leave it. I'll probably just be adjusting my stops, taking to break even up or break even up or break even, and to probably make food. But definitely 1:4 is where I'll end. I don't think I'll take more than that. All right. So that is it. That's what I'm trying to point out here now. So we can see this. You can see this clearly. Push back down, hold here. So now same thing goes for supply and demand. You can also use supply and demand areas. You can also use Fibonacci's. You can also use trend lines. I've talked about supply and demand areas. You can also use liquidity areas. All these things are zones you can use for taking your profits and also placing your stop loss. All right, I use that. I do that a lot. Let me show you guys something. I don't think I'll see something like that here. Let me show you like a trend line zone. Okay. I think I see one. Let's say now this is it. You can see this clearly. Yeah, this is a downtrend. All right, and the third chart of the trend line does the trick. All right, so you see first, second, and third part of the trend line. You can see how all these places are areas of support, or should I say, yes, resistance for the trend line. The trend line started from here, go back, came back, held at this trend line, go back, came back, held at this trend line again. You can see that. All right, you can see what I'm saying. Held at this trend line again, and then push back, went back, broke it. All right, broke it. So let's say if I wanted to take a buy from here, for example, this will likely be my next take profit, because trend line, it has shown that it has held from here, and here. Let me back it up for you guys. I actually thought this video was going to be very short, because this is actually a very simple topic. All right, here, and here. So it's also believed that it's likely to also hold here. So if I'm to buy from here, this is where I would like to take my trade out. If I was just seeing an opportunity, I would like to take my trade out here. So let's go back to the 30 minutes, for example, and see if we could see a good entry there. Okay, there's no good entry actually. There's no good entry. All right. We get structure, break of structure, return of the break of structure. Yeah, I wouldn't have entered this trade. So let's not go into it deeply at all. Probably won't have entered your trade. So that was it. So we can always use trend lines as an area of exit. Let's say the next trend line will exit at the next trend line because we believe it's going to bounce off of the trend line, just like how we believe it's going to bounce off the support and resistance, and just like how we believe it's going to bust and bounce out off of the Fibonacci, and also bounce off of the supply and demand, and also the liquidity areas. Let me check out if let me whichever trade can I let me check out. Let's say gold or silver. X. I think there was a CGUSD. All right, you can see this now. This is XAGUSD. We can see the first, second touch get a double top, and this is the third touch of the trend line, which is happening in an area. Funny enough, bro. This is another trade to buy, bro, guys. This is another trade to buy. This is another trade to buy, guys. All right. So you can see this now. First touch, you know the third touch of the trend line does the trick. First, second, and the third touch of the trend line. And this is funny enough. This is an area of resistance that turns support and support again, and then we believe it's going to hold as support. So what we're going to do is going to draw this trend line just right about here. And what we're going to wait for now. So guys, actually, gold. Sorry, silver. We've seen the buy opportunity on silver. So what we want to look for is some form of on the lower time frame break of this place. We want first of all we want the 4 hour to break this zone, a bridge forward to break and close above this trend line because the previous ones have always been holding below the trend line. So if we can get a 4 hour candle that close above it, and then we're gonna see a double top or pin bar or golfing. Remember, we use chart patterns and candlesticks pattern to enter and then ride it up to the zone. See now, why do I keep at this zone? This is an area of resistance, and market is likely to reject out of this area. So therefore, what do I do? I'll probably so oh my guys, I'm losing network right now. Network. Okay, I think we're back. I think we're back again. Up until here. So see, I just give it a 1-3. So my structure will be below structure. You can see. All right. So that's it. Simple. So I'll be aiming for 1:2.3 for my for gold for silver. Sorry. So guys, this is a opportunity now. You're seeing now. So but if it breaks below here, we are not interested. We are mostly interested in buying this market until you give us a buy opportunity. Sorry, sell opportunity. So you can see that of a trend line too. How a trend line can also serve as an area for entry, an area of support, sorry, an area of entry, and sorry, what I'm saying can serve as an area for exits. All right, because believe me, if I had gotten into this trade right about here, all right, I'm best likely to get out of the zone because the trend line has held here, 1, 2, 3, 4. So I'm most likely to get out at this point. If I took the sell from here, you get me? My stops will be here. I'm likely to get out of that zone. So that's it, guys, about trade entries and exit. Let's go back to what was that? That was Euro GBP. You hear me? So that was definitely what I'm going to do, guys. So Euro GBP sell and GBP USD, sorry, XAG USD for buys. But we need to see entry first. Here is already confirmed. We just need to see entry on the lower time frame. Not the market is just going to go past us and miss the trade. But it's fine. That's part of trading. All right. So that is it, guys, about entries and exits. It's very, very simple. You should always know when to exit your trade. Remember, always leave your exit to be at the next of these zones I listed here. It should be the next support and resistance, or the next trend line, or the next Fibonacci, or the next supply and demand, or the next liquidity, and so on and so forth. There's a lot of support and resistance examples in trading. All right. So simple as that. So thank you very much, guys, for listening and staying put up on this to this point. And like and subscribe. I'll say again, like and subscribe. And I'll start making YouTube shorts on on my trading. All right, on my trading. So I'll start making YouTube shorts on my trading so that you guys can see the trades I take and how it goes and how I let it go. All right. Thank you very much, guys. Peace out. It's a boy, Demon Kingsley. Thank you. Bye.